All right. Let's start from the dollar index. Start from the dollar index.
Gone to 3 sets. They haven't played this year. Talking about how it must have spent off the toy. Surgery almost 18 months.
Who's this? Please mute your mic. Who's this? Please mute your mic.
One of them to back up, as we say, so recent matches.
All right. So you still recorded in this section, right? Those of this section is recorded. Okay, just so once again, guys, this is this is the dollar index, and you guys all know that the dollar index is what controls the overall underlying assets. Now, whatever happens in the dollar index tends to replicate or tends to give a direction to other assets. And also, what you guys need to understand is that the dollar index is let's use the US, right? The United States is a trading partner to so many economies. The dollar, the US is a trading partner to Canada. US is also a trading partner to, I think, the Great Britain. So US is a trading partner to so many economies. So whatsoever happens on the dollar index tends to give a kind of indications on some of the asset classes. So currently, what we see on the dollar index is that let's go on to the 6 month time frame. Now, what you guys need to understand is that prior to now, right, I haven't been looking at the 6 month time frame on a particular context, but lately, while I was doing some technical analysis, while I was looking at my charts, I came to realize that somehow, you know, the way I was looking at the 6 month time frame wasn't really giving me the main direction of the market. Now, what you guys need to understand is that my trading strategy can be summarized into 2 things, right? Order flow and supply and demand. That's the summary of my trading strategy. Nothing too complex, nothing too difficult, nothing too perplex for you guys to understand. So I bank and capitalize on the order flow and use the levels of supply and demand for my entries and exits. So it's very clear that on the 6 months time frame on dollar index, the market has been trending up right from 2007. Right from 2007, the market has been rising, right? It's been in a bullish rally. You can see the trend, higher high, higher low, higher high, higher low. So we are still on that direction, right? However, during January 2023, right? July till January 2023, after this massive bullish rally, which grabbed the high here. And what you guys need to also understand is that there are stop losses at every high, and there was a stop loss here, and this candle, you know, broke above this high, grabbed the stop loss, and you know, held at this area of supply. Now it closed as a rejection candle. So after that, what we are expecting now, what we are currently seeing at the moment is that once the market was in this bullish rally, right? Now understand, you get the streets. Once the market was on this bullish rally, there was a buy side imbalance, sell side inefficiency created. What simple terms in imbalance? All right, so there was an imbalance here. So in order for the market to either continue its bullish rally, are you guys still hearing me? Are you guys still hearing me? Please, if you can hear me, type Y on the comment section.
Yes, we are with you.
All right, great. So in order for the market to either continue the bullish rally or either collapse, we have to first of all see the market rebalancing the imbalance that was created here. Hence why you can see my this is my level indicated here, my 69 level, it was indicated here, and this 69 level also indicates a demand area that was created here by identifying the order block here. So if the market closes and rebalances the imbalance that was created here, then hits the other block, we now wait for further reactions in the marketplace. But until then, right, all we have to do is just to work with the flow. So now that we've been able to identify on the 6 months time frame that the market has to rebalance the imbalance here, and in order for it to rebalance this imbalance here, it is still in a bearish direction, all right, in a bearish order flow. Now we scale down to the monthly time frame to see what we are having there. On the monthly time frame, it's very much clear. You can see that the market was even in a consolidation, in a ranging market for about 2 years now, since 2022 up till date. Market was in a consolidation. It has just broken out of that consolidation, or giving a sign that it's going to break out of that consolidation. So now that we have a direction on the dollar index, right, that the market is bearish, we use this indicator to go on the inversely correlated assets to the dollar index, which is the GBP/USD and the Euro/USD. So let's go to the GBP/USD now that we've identified the bearish direction or the bearish order flow on the dollar index. So on Euro/USD, same things. Let's go to the 6 month time frame to see what the Euro/USD has been doing, right? So very clear, it was on a collapse. Still the same thing. Inversely, what happened on the dollar index is what is happening on the Euro/USD. A grab on liquidity, close as a rejection candle, and it's also, let's take this first out. It's also going to the supply area, which is also an imbalance. There's also an imbalance somewhere here. So we expect Euro/USD to rebalance the imbalance that was created here, and of course hit the main threshold of this order block, which is the supply area. So now that we have the order flow on the 6 month time frame that is bullish, we work with that order flow, we work with that bullish order flow, which is like a direction. So the higher time frame is not for execution. The higher time frame is not for trade to place trades. The higher time frame is just like a direction. It gives us a direction. It's just like a Google Maps, right? It gives us the direction of the market. Okay, now that we've been able to identify that on this higher time frame, Euro/USD is bullish, we scale down to the smaller time frame to find trades that are aligning with that bullish order flow. So going down to this monthly time frame to see what we have there, you can see that there is a high here, and what rests above every high? Stop losses, all right? What rests above every high? Let me hear someone from the background. What rests above every high?
Stop losses.
Oh, we have a lot of people moderating. Please, you guys to talk to me. We are in this is an interactive section, please. Let's not keep mute, right? What do we have at every high? Please.
Yeah,
what
stop
do
losses.
Of course,
We have
orders here to be.
who's saying something? Stop orders. So this person is correct. So we have stop losses at every high. So with the stop losses, we know that with that direction order flow we had on the 6 month time frame, and scaling down to the monthly time frame, we work with that order flow. And working with that order flow, we can see that there's a high here, which is like, let me use this stuff. Give me a sec. So there is a high here, stop loss here. Let me type it out. So we have a stop loss resting above this high, and we expect Euro/USD to grab this stop loss and of course get to this area of supply, which we identified on the 6 month cycle. Now, before we do that, see what happened on Euro/USD all of this moment. Now we can see that this guy was respecting this demand area. If we can plot out this area, we can see that it's very clear that this is order block, broke above this other block, pulled back into this other block, and now the bullish continuation is happening. This is what is happening here on Euro/USD. This is what is happening. Went into the other block. Now, once it gets here, of course, we may expect anything like go back then. So this is almost like the direction. So with that direction we have in mind, let's go to the weekly time frame to see what we can pick out of this. So let me delete this. Permits me to delete this arrow. So on the weekly time frame, what do we identify on the weekly time frame? Let me take this out. What do we identify on the weekly time frame? The weekly time frame is to give us the supply, is to plot out the areas of supply or demand on the weekly time frame. All right. So plotting out the area of this is a supply. This is the demand rather. This candlestick that forms the order block gives us the demand area, and we are going to highlight that out. We are going to take that out. So taking this out, we know that this is a demand, and any pullback to this demand is for a buy, is for a buy continuation. All right. So we go to the daily time frame to see what we can take out of the daily time frame as our entry. As you guys know that I look to take my trade from the daily time frame. I seldom go lower than the daily time frame because it gives me the space of mind. Now on the daily time frame, we now would refine it properly. So where is the starting point? Where is the order? Where did the order block start from? Here, of course, here. So we refine it to this level. We refine it to this level, and this is it. So it's as simple as that. So what are we expecting now? We expect a pullback from where the market is currently to this order block for a buy. So this is what we're expecting on Euro USD. Pull back into this level, right? It's going to drop. That's what I'm expecting in line with what is happening on the weekly time frame. Today is already Friday, so I expect a bearish pull back into this demand area for a bullish rally. So first profit target could be this high, all right? Then subsequent profit target, but you know that our overall, give me a second, we'll have it at the back of our mind that our overall target is what we have here is what the 6 months time frame gave us. So until Euro USD gets to this level, we are not interested in any sell. So any sell that occurs at the cost of this rally, we know that sell is just a pullback. So just know the direction of the market, have the order flow on the 6 months time frame or on the monthly time frame. Then what you come to do on the daily time frame is for you to find the levels of supply and demand. All right. If you don't really understand the concept of supply and demand, I want to tell you guys to go study supply and demand concepts because it will really help you. So it's very simple. My trading strategy is not really that complex. Very simple. In fact, the win rate is high, right? It's just that you just have to have the confidence, and it's also going to bring your confidence. And you don't really, for now, let me say this. For those of you guys that are scalpers and day traders, you don't need to hold the trades for a long period of time. All you just have to do is use the idea of what you have here on the daily time frame to go to the whichever smaller time frame you want to trade with, and trade in this direction. So if you align your trades in this direction, most often it will lead you to the winner. So that's just it. So let's calculate how many pips that we have here. This is about first level target is about 150 pips. So we are risking about the low. So we are risking about 50 pips. Yeah. So we are risking about 50 pips to make 160 pips. All right. So we are risking about, okay, it's not 50. We are risking about 60 pips to make 160 pips. I think that is 3:1. Am I correct? Is that 3:1?
Yes.
Great. So overall, that's the first level target. Overall target is about 600 pips. So on trades like this, I hold it on the hedge fund account. Trades like this, I hold it on the hedge fund account. So possible 600 pips on Euro USD. Now the hedge fund account, it will surprise you that just this trade is going to give us about 15 to 20% returns. Very simple. 15 to 20% returns on investment. So imagine if we have about 4 like this in a year, then we are closing the year on the positive side. All right, no rushing, no panicking. and all of that stuff. So we just need to find 4 to 5 strings in a year, and we are closing on the positive side. So that's it for Euro USD. Let's go to the GBP USD. Please, if you have any question, kindly write down your questions so that at the end of this section we can, you know, answer the question together. Please write down your question.
Mama.
Who is that person? We have about 7 persons in the waiting room. Who is this man? David in now.
This
guy doesn't know that he's in the meeting. All right, so let's go back to what we've been talking about. GBP USD. Please, if you're just joining us, mute your mic. As you're joining us, mute your mic. Don't interrupt us, please. Just join us, mute your mic, please. So the GBP USD, quickly, simple as possible. Imbalance created. My mouse. So my mouse is not giving for this mouse. Sorry guys, this mouse is giving me an issue. All right, guys. This will be on this. So let's go straight to the point. GBP USD as simple as possible. Let me delete all of this stuff so that you can see what we're talking about. So we have to be very careful on GBP USD, even if when we know that the order flow is also bullish on GBP USD. Now, the first level target, there was an imbalance here, which price has already rebalanced the imbalance here. So we have to be very careful because as we speak, GBP USD is currently at a supply level on the higher time frame. All right. So even if we are buying GBP USD, we are not buying it with that free mind. We are going to buy Euro USD. All right, because this is already an area of supply, and the market has already dipped into this area of supply. So it's dangerous for us to keep piling positions carelessly on this asset, even if we know that the direction is still bullish. All right, but my overall target is this other supply, which I expect it to run above these highs, and hit this level. So with overall direction, I'm still bullish on GBP USD. With my overall target as 1.45944. So with that direction in mind, we go down to the monthly time frame to see what the monthly time frame is telling us. And on the monthly time frame, it's pretty much very simple that the target is still bullish right now. What we do now is to go on the weekly time frame to identify the area of supply. And on the weekly time frame, the area of supply is, let me take this off. Oops, the meeting is ending in 10 minutes. This meeting is ending in 10 minutes, but we'll try as much as possible to round it up in 10 minutes, before 10 minutes rather. So this is the level, right? This is the supply level. So what we do is go on the weekly time frame to expect a pullback to that supply level for us to buy. So going to the daily time frame, you can see that we have to refine this demand level, right, to make it really fit with what we have on the daily time frame. So this is what we have. This is the demand area, which is the order block. So first things first, we expect a pullback to that level. So we are not just going to buy carelessly because we know that the order flow is bullish, right? The areas of supply and demand is what gives us the buying level, the buying areas. So looking for this arrow. So this is what I'm expecting. Pull back on the GBP USD into this demand area, then further rally. First level target is going to be here. Then as the market is going to be pulling or is going to be rallying to this level, of course, they are going to form some other areas of demand where there could be possible buys in the future. But then this is what I have on GBP/USD. First, pull back into the demand area and probably something like this. Then continuation to the upside. So that's it for GBP/USD. Let's see how many pips we have here potentially. We have about okay, we are risking about 120 pips. First level target. Did they fear? What is that? First level target is about 300 pips. Overall target is about, let's see, overall target. Overall target is about 1,500 pips. So 1,500 pips on GBP/USD, and about how many pips do we have in overall target on Euro/USD, please? Someone should help me. How many pips in overall target do we have in Euro/USD?
600.
600.
600.
Okay, so 600 plus
Yeah.
600 plus 1,500. So that's over potentially 2,100 pips on both assets. That's it for those two assets. Which other one do we check? GBP/USD, GBP/JPY. Let me check that one. Let me talk about that because that's the one I'm really big on at the moment. GBP/USD, sorry, USDJPY. So USDJPY is very easy, nothing too complex. All right, nothing too complex. Let's go to the 6-month time frame. This is how trading should be. Trading should be very simple for you. Don't be too, see, when it's too complex for you to understand, when it's too difficult for you to understand, then you're going to lose money. All right, try as much as possible to make your trading very easier. So as we can see that this guy has been bullish for the longest, I think since 2012. USDJPY has been really bullish, and recently it's broke above this high. So the next level target we are having here is a rebalance of this imbalance, which is at the 154.518 level. This level is the overall target. So we can see that the order flow is bullish, and of course we can see that there was already a pullback into a discount on the monthly time frame. Let's go to the monthly time frame on these assets. So on the monthly time frame, we can see that it was a massive collapse. Now, when a lot of people saw this collapse from August, people were saying that there was a reversal on Euro/USD. Now, let me take this out. A lot of people we calling this a reversal, but I don't call this a reversal. If you don't understand supply, you don't understand demand, you call this a reversal, but this is not a reversal. This is not how the market reverses. All right. So I see this as a pullback because on the monthly time frame, let me highlight this so you see. On the monthly time frame, this is a demand. So you guys should know what people call reversal. This is not a reversal. This guy is still resting above. This guy is still resting above the demand area. So it's still on the upside. The bullish rally is still very valid. Now going to the weekly time frame, let's see what is happening on the weekly time frame. Now you can see that it started respecting that demand area by closing at the bullish engulfing. Now notice what happened on the weekly time frame. There was a bullish engulfing candle close. Now that should tell you that it's about to respect that demand area. Now going to the daily time frame, let's see what we are going to take out on the daily time frame. We will see that there was a break of structure, and this guy is currently pulling back into a demand around the monthly demand. Don't know if you guys understand that. So this is a demand on the daily time frame, still within the overall demand area on the monthly time frame. So I expect this guy to pull back into that level before a buy. Something like this. You know, but my first level target is here. So keep this at the back of your mind because this is a potential this is the potential trade between next week, Friday, between now and next week, Friday. Guys, give me a sec. Give me a sec. Let me handle something here. We still there? Can you hear me? Sorry, I'm back. Guys, are you there? Can you hear me, guys? Can you hear me? Can you hear me?
Yes, we can hear you, sir.
We can hear you.
Please. I just noticed that my laptop was about going off, so I had to inform my people to put on the gen. So that and two things are actually disturbing us now. Our sickness plenty. Second one is that this meeting is going to stop in. Are you guys still enjoying the section? Because this meeting is ending in about I think 2 minutes. But this is what will happen, right? Because I don't want, most people have a short attention span. So in case this meeting ends, right? So what I'm going to do is that I'm going to share another link on the Telegram channel and on my WhatsApp status. So in case this one ends, this one is going to end so that I have a recording to post on YouTube. Are you guys understanding me? So this one is going to end so that I have a recording to post on YouTube. But immediately this one ends, it doesn't mean that the section has ended. All right, I'm still going to grant an opportunity for questions. So where you guys want me to analyze the asset that you guys want me to analyze with you guys together, write it down by the next meeting, right? That not like the next meeting. Once this one ends, check the Telegram channel. I'm going to drop the link for you to join immediately. All right, so that we can talk about it. All right. Someone said that JPUSD top down was golden, sir. Yeah, thank you. It is. It is. Good. USDJPY. No problem. We're going to speak all about all of those things. We are going to speak about all of those assets. I still have enough time to spend with you guys today. All right. I canceled all my meetings on my calendar because of this Black Wall Street call. I'm going to spend a lot of time with you guys today. So I just want to inform you that if this meeting ends, because it's going to end in the next 5 minutes. It's going to end in, what am I saying? Not 5 minutes. It's going to end in the next 60 seconds. So once this particular meeting ends, please check the Telegram channel. I'm going to drop a link for you guys to rejoin. All right. And I'm also going to post it on my WhatsApp status. So you guys can get the link to drop the next section. Immediately this one ends. Understood? Let me know you guys understand because it's about ending. Understood?
Yes, both we understand.
Great. Please check the Telegram channel now for the new link. All right, check the Telegram channel for the new link. Check the Telegram channel for the new link. If someone reshared the link to you, ask that person to share the next one to you for you to enable you join the one that's going to start after this.